So what just happened to gold and silver? I mean, what really happened? Well, you had a great chance to add to your gold stack if you pulled it off, and if you didn't, you got a really good preview on how to do it next time. Okay, let's start with what just happened. Silver just had the steepest single-day drop in history, 30% drop in a day. It was fast, it was violent, there was very little warning. Now on the upside, that gave us two things. It gave us a great time to sell and a great time to buy. It also exposed something that just does not show up on a chart: liquidity. Now, gold was hit too, it dropped 9%, but it did not behave the same way. Now, all of this is very important, and what matters now is knowing why it happened, so you can see past the noise, you can recognize when it starts to happen again, and be in a position to benefit from it. Now, we're going to get into all of that, but first, a quick shout out to channel sponsor Summit Metals. If you're looking for gold and silver, they have you covered. If you're looking to sell gold and silver, they can help you there too. SummitMetals.com. Okay, just background, $120 an ounce was my sell target for silver. Now, that was a plan. I didn't start with a specific target in mind. That part came more recently. It just started with a clear decision that I was going to move out of silver at some point. Now, I didn't have a huge amount to sell. I didn't get that full $120 an ounce price, but I did sell most of it. And that took some work, which is the part that most people tend to miss. Now, this past week, silver felt pretty chaotic. It might have seemed pretty stable on Tuesday, January 27th, when I mentioned that I was about to start selling, but that changed very quickly. By Friday the 30th, it had lost 30% in price. We all know about that. But by February 4th, late in the trading session, it looked like silver was stabilizing, at least for a day, because the following day, January 5th, it dumped again and silver fell into the low 70s. Now, during that window, the Shanghai Futures Exchange announced that multiple linked accounts had exceeded intraday opening limits. New positions were restricted, and at the same time, reports confirmed very large short position was being established in silver. There's a technical word for this. It's called shenanigans. Now, you should be aware of at least some of that detail that shook up the market, but the most important part for anyone holding physical silver is that these kinds of events can and do happen, and they happen completely outside of our control. Now, at the retail level, that violence in the paper market has a very specific impact on liquidity. I talked to 5 local shops personally, and only 2 were buying silver when I was selling that week. Now, of those, only 1 was buying anything other than American Silver Eagles. And I've seen widespread reports of that same thing in other markets from other dealers. So this should really have everybody's attention. This is not a detail you want to learn the day you need to sell. And this is the part that some people don't like, and that's fine. This isn't about advice. It's about being clear with what you own. Now, silver can move like this: fast, violent, very little warning. Gold is more stable than silver. Silver's move from $30 to $120 was real, and it was fun, and I hope everybody caught some part of it, but that does not make it an alternative to gold as a long-term hold. Silver just gave up 30% in a day. That was real too. And that isn't a flaw, that's a feature. That's how silver works. So it's why gold and silver can't be treated the same way. Now, a lot of people are going to say that silver was manipulated, as if that changes what just happened to anyone holding it. Putting a label on it, saying banks caused it, giving it some kind of external catalyst does not change the outcome. The kind of move that just happened to silver has happened before. It's going to happen again. Now, saying it was caused by a bank or banks or whales building short positions wherever they were in Asia, wherever, or any similar explanation does not change the fact that local shops weren't buying most forms of physical silver at the time liquidity would have been most important. Now, a lot of people are going to give their explanation on why silver moved like it did. Manipulation, banks, shorts, Asia, all of those conversations happened after the move. Now, at the same time, in the real world, a very different thing was happening. Local shops weren't buying most forms of physical silver, and that's right when price was supposed to be doing you a favor. So that's the gap, looking for causes instead of dealing with the actual experience. What mattered in that moment was simple. You could either sell or you couldn't. So let's just tear the Band-Aid off here. There is a lot of noise around this. Some of it's smart, some of it's not. A lot of it blames outside factors, so it doesn't feel like a silver problem. Now put all that aside for a minute, because those explanations do not actually change anything for you at all. They don't change your ability to sell. They don't improve your liquidity. What they do is make it easier to keep holding silver while other people use it as a means to an end. What do I mean by that? Those other people, they're trading it. They're buying it low, they're selling it high, and to the extent that the big players are able to create volatility, they are using those swings to do more of it. You and I don't have that kind of scale. We don't have the power to create volatility, but we can watch for it. We can watch for times to buy. We can watch for times to sell. Now, I mentioned at the very beginning that we got both of those this past week. We got a time to buy and we got a time to sell. Now, as I've also said, I took advantage of that time to sell, and it wasn't a huge move. I only had a few hundred ounces, but I can see in the comments that some people still interpret that as me not liking silver. And that isn't at all the case. I actually used silver in a way that gold wouldn't have allowed. Then I took some of that and I bought a little bit more gold. So I don't dislike silver at all. I just don't treat it as something that it's not. Now, if you haven't seen my video from Thursday giving the play-by-play of what actually happened at the local shops, you should watch that next. Because this video might not make sense without that context. What this was meant to be was a step back, looking at silver more broadly, where it works, where it doesn't, and get into how easy it is to confuse the two. Because Thursday's video gave a real case of no liquidity, and that should shock you. Now, I don't think that this was a one-time issue. Silver is going to run again, and when it does, people are going to want to sell it. Now, I think getting ahead of that is the best way to take advantage of it. Really, that's the point of this whole thing. And let's call it good there. I'm curious to know if you took those opportunities to buy or to sell, or maybe you're positioning to do it again soon. Let us know. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you want to hear more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.